The SPAC GGPI is going to merge with Polestar. Now you might say, okay, great, the SPAC. I don't want another SPAC, but this is not just another SPAC. So in this video today, we're going to talk about why Polestar is different from all the other SPACs, why it is, well, quite a bit more special in my personal opinion, and we're also going to take a look at the valuation of this company. So we're going to do some fundamental analysis and some financial analysis. So let's do it. Now, even though we're not going to talk about technical analysis today for the SPAC GGPI because it doesn't really make a lot of sense looking at a chart this young, I do want to let you know that I'm going to be raising the price for my technical analysis program from $78 to $97. So keep that in mind. Before Wednesday, you're still going to be able to take profit of this lower price of $78. I've been adding more and more content to the program, so it's become more and more valuable right now. So that is why I'm raising the price right now. If you have any specific questions about this program before buying it, then definitely let me know in the comments below. Okay, so what is Polestar exactly? Well, Polestar is a car company. You might not have seen it yet, but yeah, they are getting more and more presence right now, especially here in the Netherlands, for example. I'm going to talk a little bit more about that later on. But Polestar is basically the sister company of Volvo. You might know that company. And both of these companies, both Volvo and Polestar, are owned right now by Geely or Geely. I'm not entirely sure how to pronounce it, but it is a Chinese company. Okay, so keep that in mind. However, when we look at one of the questions that was submitted to Polestar, they say that it's not entirely accurate to describe Polestar as a Chinese company because they say that Polestar is a Swedish premium electric performance car brand, headquartered in Sweden, of course, and their holding company is going to be in the United Kingdom, and they're going to try to separate the Polestar brand from Volvo cars. Now, the SPAC GGPI is a SPAC that is backed by billionaire Alec Gores. You might know this guy because he has brought quite a lot of SPACs on the market. For example, Matterport has been going with a Gores SPAC, and also Luminar has been going with a Gores SPAC as well. So they have quite a lot of experience in the realm of SPACs for sure. Now, the thing is, they are not just another SPAC, or at least Polestar is just not any other SPAC. Polestar already has revenue. $1.6 billion this year is expected to be their revenue for 2021. They already have products, of course, and well, I see these products in my real life because I'm not entirely sure how this is going right now in your country, but right here in the Netherlands, I notice more Polestars every single day. It reminds me a little bit of the situation about like 1.5 years ago when I was counting Teslas on my way to the gym. I was counting Teslas, and at the beginning when I was counting them, there were just not a lot of Teslas. I might see like 0 or 1 Tesla every single ride of like 5 minutes. Bike ride, that is, of course, because I'm from the Netherlands. But right now I'm seeing more and more Polestars during my ride as well. So it's kind of interesting to see that, well, Polestar seems to be a little bit like the Tesla of like 2 years ago, more or less. Now, I'm not entirely sure if a Polestar is going to become as dominant as Tesla is, but it's very good to see that this SPAC, Polestar, already has products, already has a revenue, instead of all the other SPACs that do not have any revenue just yet and just have basically an idea. And the interesting thing is they are publishing quite a lot on the website of the SEC, or at least they're submitting a lot of documents to the SEC. And yeah, that doesn't really happen all that often, but as you can see, they're just publishing a lot of articles, a lot of interviews, a lot of announcements. They have some social media posts. So it really looks like they are going to try to make this as public as possible. It seems like there is some kind of like PR team behind it, and they're really trying to market, really trying to promote this merger between GGPI and Polestar. So let's then take a look at the investor presentation of Polestar and GGPI. We can see that currently they have 2 products, basically 2 cars. The Polestar 1, which seems to me a little bit more of a proof of concept or so, because it just doesn't really have a lot of range and the price is quite high. And if you compare that to the Polestar 2, which is the car that I'm seeing quite a lot here in the Netherlands, you can see that it's way cheaper, $50 to $60K, and the range is quite high indeed. It is about 550 kilometers. So that's not too shabby after all. And yeah, the thing is, they are right now in 2021 are going to sell more or less 29,000 vehicles, 29,000 cars in 1 year. But in 2025, so in 4 years time, they want to, basically multiply that by 10. They are wanting to, they basically want to sell 290 vehicles in one entire year. Of course, that is also going to be, basically made possible because they are going to release more products, more cars. The Polestar 3, 4, and 5. These are all basically SUVs, pretty big cars, and it seems like they are trying to, basically come into the price range of the Porsche Cayenne, the Porsche Macan, and the Porsche Panamera, which are pretty interesting cars for sure. So yeah, they do have a very ambitious goal from 29 to 290,000 cars in basically 4 years' time. Let's see if they're going to be able to do that. One little detail that I got from this investor presentation is this little sentence over here: full blockchain-based data transparency throughout the supply chain. That sounded very interesting to me. Okay, so as we can see right now, they are mainly in Europe, also in the United States and in China. I'm not entirely sure how that is in your country. Definitely let me know, by the way, in the comments if you're seeing more and more Polestars in your region as well, because here in the Netherlands, we are definitely experiencing more and more Polestars. But yeah, as we can see, they are going to try to expand their business not only within Europe, but also in Asia Pacific and the Middle East in the next couple of years. Then on this slide, we can see indeed that they are going to try to go from 29,000 vehicles sold to 290,000 vehicles sold. You can basically look at the roadmap in the next couple of years, and you can also see that the revenue is going to increase almost like tenfold or 11-fold even, from $1.6 billion in 2021 all the way up to $17.8 billion in 2025. So what about the valuation, you say? Well, let's take a look, because we can see that the pro forma valuations are on this slide over here. The pro forma market cap, or in their words, the pro forma equity value, is going to be $21.253 billion, of course. Keep in mind that they are going to have about $1.253 billion in cash. So if you take that pro forma market cap, if you take that pro forma equity value, you subtract the amount of net cash they are going to have on their balance sheet, you're going to arrive at the enterprise value of $20 billion. So basically the company Polestar would be worth $20 billion, which is quite an insane amount of cash, of course. Well, do keep in mind, of course, that the sales for 2021 are expected to be about $1.6 billion. So if you create the price to sales ratio, that's a ratio that looks at the price of a company. So basically the market cap of the company, which right now is about $21.2 billion, and you divide that by $1.6 billion, which is the sales, which is the revenue, then you get a price to sales ratio of 13.3. 13.3, important number to remember. And the enterprise value to sales ratio, so basically the enterprise value we saw was $20 billion to sales ratio, so the revenue was $1.6 billion, 20 billion divided by 1.6 billion is 12.5, so the enterprise value to sales ratio becomes 12.5. So let's actually take a look at the numbers for Tesla to have a kind of comparison, right? Because maybe those numbers don't really mean anything to you. I can definitely understand that. Well, let's take a look at the numbers of Tesla. Here we can see that based on the current numbers, based on a market cap, the current market cap of $780 billion, and based on a revenue, an annual revenue of almost $48 billion, which is the Q2 revenue, so basically the revenue from the second quarter of this year annualized. So basically it is, this number over here, so 12 billion multiplied by 4. So then you have an annual revenue of 48 billion. If you then take the market cap divided by the amount of revenue, then you get a price to sales ratio of 16.3. As we said, Polestar was 13.3. So basically Polestar is a little bit cheaper in that regard. And if you look at the enterprise value of Tesla right now, it's about $764 billion divided by the annual revenue of 48 billion gives you a enterprise value to sales ratio of 16.0x. And of course, Polestar's EV to sales ratio is 12.5x. So we can see that Polestar is a little bit cheaper compared to Tesla in this regard. But that, of course, is based on the 2021 revenue, because if you look at the 2023 revenue or the 2024 revenue for all of these companies, so not only Polestar, but also Tesla, Lucid, NIO, and Xpeng, we can see that Polestar is definitely cheaper compared to these other companies. We can see, for example, if we look at the enterprise value to sales ratio for 2023, it is 3.0x for Polestar. We can see Tesla 10.8, Lucid 6.5, NIO 4.0, and Xpeng 3.5x. So we definitely see that Polestar is the cheapest of these 5 companies out here. If you look at the enterprise value to sales ratio of 2024, so if you look at the revenue of 2024, then the EV to sales ratio of Polestar is only 1.5. Tesla 9.3, Lucid 3.6, NIO 3.2, and Xpeng 2.1. So we can see that basically in all scenarios, Polestar is definitely the cheaper company if you look at the valuation of these companies, if you look at the price to sales ratios and the enterprise value to sales ratios. So if you want my opinion about this company, I believe this is one of the more attractive SPACs I've seen this year, because Polestar already has existing products. They have an existing car, of course. I see them more and more in the Netherlands over here. They have $1.6 billion in revenue. The valuation is pretty good compared to the competitors out there. And of course, the price per share right now is still close to that $10 level, because keep in mind, if you buy a SPAC, you can always redeem your shares for $10 per share. So in my opinion, it's a pretty good stock to maybe park your cash, because, well, the downside is quite limited in my opinion, but the upside could potentially be interesting. Of course, that is not financial advice. Now, I'm very much looking forward to hearing from you though, because I'm wondering, what do you think about this company? What do you think about Polestar? Do you like Polestar or don't you like Polestar? Let me know in the comments. Now, don't forget, I'm going to increase the price of the technical analysis program, so keep that in mind. But if you have already looked at that, then definitely check out this video over here, which is the video that I created about ChargePoint. You might definitely like that. And if you have already seen that, well, no problem. You can always check out my mission, which is right over here. And with that being said, thank you very much for taking the time to watch this video, and I hope to see you in the next one. Bye-bye.